Very good morning, friends. I'm Nalnakshi Swami, welcoming to my channel, Smart Index Edge. Based on the India VIX, I've calculated the levels as guidelines for today's trade. On the upper side, 23,399, and on the lower side, daily low to be 23,027. And weekly high to be 23,706 and weekly low to be 23,027. No. 22,720. Sorry. This is the extreme levels. On the upper side, 23,706 and extreme low to be 22,720. So in a week, already I've enabled my template, Monday, Tuesday template. We have come to the Wednesday, Monday and Tuesday, Wednesday. Today is Thursday. Thursday's price action. So it is you can see the price action on Monday. Monday it was a fall from the Friday's gap down level and it consolidated within this. Today what can happen is it is showing it went sideways on Monday, Tuesday and Wednesday. Today it can cross this level. This is weekly boundary, 23,349. If it crosses this boundary, there is an inefficiency from the Friday to Monday. It had gap down. It can make an attempt to fill this gap, and then there is also 200 period moving average placed over here. It can interact with the 200 period moving average, which is around 23,420. Today, in the world market, actually, Gift Nifty is showing 128 to 128 points gap up. That means if I measure this from the low of yesterday, this is exactly coming to the upper boundary of the Monday's high. So it is gapping. Suppose if it opens gaps up, it can expand to this level. 133 points, 133 points. So it can cross the daily high, VIX daily high level, 23,399. So if it starts going past this level and a failure, filling this gap, failure can bring down the market. But the range expansion is around 172 points. So when there is 172 points, market can gap up, and if it gaps up, what should be your strategy? You should wait for the discount level and then you have to take the trade. You cannot trade. As normal human beings or an intraday trader, you cannot place the trade when it gaps up. Do not hurry yourself in the gap up because market will settle. Within 2 15 minutes candle or 5 15 minutes candle, that means within an hour, you will get a clear picture on the direction of the market for the intraday. For the intraday, then only you can take the trade and you can do some sensible trade. Otherwise, if you jump into the trade for the initial gap up or anything, you will lose money. Here, if I see the trend structure, this trend structure has started from this point, that is 23,592. 592 and 23,471 was a dent here. You can see over here, this is the monthly, that blue color line, dots, what it is showing is a monthly level, monthly boundary. This is monthly boundary. Let me write it down. This is weekly boundary. Now, after this huge fall, if I take the FIB tool and measure the retracement, suppose if it retraces to this, that will be 0.5 percentage, that is to the 23,321, and 0.618 comes to 23,381. And exactly even the 200 period moving average is coming down, and it is near the 0.618 level, 23,381. So if the market jumps to that level, it may face resistance. And even the VIX level is also calculated, and it has given the level of 23,399. So by analyzing in all the ways, I have found the levels. So your strategy, if it gaps up and takes out these are the sellers. There is a stop loss actually. In this area, there are no new sellers because it has gapped down, but only dynamic liquidity is there in the market. Dynamic liquidity, that is an inefficiency found in the market. The sellers actually, who are the sellers dominated from this level, they will find this, the market will find this dynamic liquidity to gap up to this level, and market may reverse. And already market has set up double bottom in this area, in this range, 23,144 to 23,146. So there is static liquidity available in the market. This is static liquidity. By creating the double bottom, market players have created a stage for the static liquidity. The reason for this is market has come down here for the first time to 23,144, and it has rallied strongly above this level. So probably the traders who have gone long, their stop losses are there in this, lying in this market. You can see 3 times it has come here to this level, first level and second level. So there is 23,000, and market rallied, made an higher high, and it has come down to 23,146 to make a double bottom. So already static liquidity is there, and the market is, we are trading in a seller's area. You must remember that even if the market gaps up and retests, it may create an illusion that market is going to go up, it is going to reverse. It is not so. It is not so. Still, we are in the seller's area. then market will grab this liquidity, dynamic liquidity over here, and then it will retrace back and mitigate this. It will come down to seek the liquidity down here to static liquidity, and then market may find a direction to the market. Direction either to the upside or to the downside. So, since they are taking the liquidity above this level, sellers' liquidity, and coming back and taking the liquidity beneath the buyer's liquidity, these are the stop losses, buyer's stop losses. So, buyer's stop losses, then market may find direction or reversal in the market. The valid reversal can be anticipated in the market. Until then, this is a play. What happens today, it may be an expiry play. Today is an expiry day. It can go up. It can go up and create an illusion, rally. It can stay there for there. And on Friday, there may be coming down, or Thursday, Friday may be in a range and it can come down. To next week, it can seek liquidity. So till that time, your trade should be within the monthly boundary, that is 23,467. Anything in that boundary, market may react and come down. So your upper boundary is monthly boundary and immediate boundary is weekly boundary. Market can go past this level to seek the liquidity, dynamic liquidity there. So when it gaps up, for an intraday trader, you will not get any trade. Suppose if the people would have taken the position yesterday around 2 p.m., and this is 1 minute, which time? Let me place. That is around 1:30. They can carry they are going to book their profits when market gaps up in the initial gap up. After initial gap up, if it gives a chance, you may get a trade for intraday this range. Coming to the Bank Nifty can also do the same thing. And I've calculated the levels for the first resistance as 49,341 and second support for 48,361. And first support is 47,717 and second resistance 49,785. So if I place the cursor, this is Friday's low. From Friday, it has come down. So market can make an attempt to this level. Go up to this level. Can rally up to this level. Like this. Trend structure, it can show. Because if I measure this trend move, it comes to this level, 49,400 and 358 to 434. So today you will get a chance, you may get a chance in intraday. You need to wait. You need to wait for the patience. You need to see for the discount, then only you should take. Let it be 1 hour, let it be 2 hours. Market will give you one dip to enter into the market. Thank you very much, friends. Nalnakshi Swami signing off.